On this episode of Taking Stock, should you invest in Sygnus Real Estate Finance's IPO? Shares for the public cost $19.30 Jamaican, or a little less than 13 cents US. They want to raise nearly 4 billion Jamaican dollars. The SRF team will tell us more.
We would scour the Caribbean, and in particular Jamaica, because that's where we are focused on at the moment, and look for strategic property acquisitions.
And the analysts weigh in on the latest market developments. They'll give us their take on SRF.
And the fact that they're going to be focusing more on the value stage of real estate financing is extremely lucrative, because that's when you're able to extract high returns for your shareholders. So it's a very good strategy.
We're also looking at Supreme Ventures' earnings report now that Izizzi has entered the market.
1, 14, 19, 2.
How has competition affected SVL's performance?
It's kind of mixed in the sense that you've seen stronger revenue, but the operating profit kind of coming in a bit, and that could be due to competitive pressure.
And the Delta variant of COVID-19 is wreaking havoc on the US market.
Earlier this week, on Monday, the Nasdaq had its worst day for 2021. And I think it was on like 1 or 2%. And that was just, based on the increased fears of Delta pushing us back into further lockdowns.
I'm Kalila Reynolds, and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. Before we get started, head over to my website, KalilaReynolds.com/newsletter to get my newsletter straight to your inbox twice a week. You can click the link up here or in the description box below. Now come on, let's get this money.
But first, here's what's hot. Brought to you by Jamaica Money Market Brokers, your best interest at heart. Consumers and businesses were more confident about economic conditions in the second quarter of 2021 when compared to the previous quarter. However, optimism among both groups is still below pre-pandemic levels. That's according to the latest survey commissioned by the Jamaica Chamber of Commerce, JCC. Compared with the first quarter, consumer confidence increased by 29 points, while business confidence increased by close to 16 points. Head of Market Research Services Don Anderson said the results indicate a possible resurgence of high levels of confidence. But he said that assumption will have to be confirmed with the data from the next quarter. For the period under review, most consumers were generally of the view that conditions will get better as the economy reopens. However, most still see jobs as being scarce. Some businesses are also optimistic about better conditions, with COVID-19 vaccinations increasing. But there were those with reservations due to factors like the depreciating dollar and inflation. The World Bank will be relocating its Caribbean regional head office from Washington, D.C. to Kingston later this year. Minister of Finance and the Public Service, Dr. Nigel Clark, says the relocation will take effect in the last quarter of 2021, noting that the financial institution will continue to serve the Caribbean, including Jamaica, from the new location. In a tweet last week, the minister said the government looks forward to welcoming the entire World Bank Caribbean department to Kingston. The World Bank Vice President for Latin America and the Caribbean was on the island last week with a team meeting with cabinet officials and senior public servants in the finance ministry. Talks related to further cooperation in helping the country achieve its growth and development objectives. Mayberry Investments intends to raise up to $750 million to acquire real estate lots for development. Mayberry plans to raise the funds in 3 separate issues, the first being $256 million of short-term debt for issue on July 28 at a fixed interest of 6.75%. The note will mature in October 2022. The terms and timing of the others are yet to be disclosed, but CEO Gary Peart told the Jamaica Gleaner that the placement is part of a larger transaction involving 3 series of notes over time. Details around the investment have also not been disclosed. However, Peart said the developments are not related to its real estate projects with food and technology conglomerate Mosan Jamaica. Kingston Properties has signed a joint venture agreement with 2 American companies to acquire a 155-unit multifamily property in Atlanta, Georgia. The transaction was valued at $15.5 million. Kingston Properties Miami, Apex Development Group, and Trevita Holdings have also formed a joint venture company, Polaris, through which they will spend another $2.5 million over 2 years on renovations on the property. Kingston Properties will hold 40% of Polaris. The property deal is KP REIT's first in Georgia and its first investment in the U.S. outside of Florida. The Atlanta deal is the first of 4 transactions that Kingston Properties told shareholders were pending this year at their annual general meeting this month. The Jamaica Manufacturers and Exporters Association (JMEA) is expected to meet with online retail giant Amazon to discuss export opportunities for local small manufacturers. The meeting will be one of the firsts for newly installed president of the JMEA, John Mahfood. He was elected president last week, replacing Richard Pandohi, who served for 2 consecutive terms. Mahfood told the Jamaica Observer that he's eyeing Amazon sales as a game changer for the smaller Jamaican manufacturers, especially as they have challenges exporting directly to consumers due to the costs. Jamaica is now among 188 countries that are on Amazon's sellers list. Mahfood says the JMEA also aims to increase exports to the Caribbean. Managing Director of the Jamaica Observer, Danville Walker, has been appointed Senior Vice President at West Indies Petroleum Company Limited. CEO of West Indies Petroleum, Charles Chambers, says Walker's addition to the team is a strategic move in helping the company expand its participation in the energy sector across the region. Meanwhile, Walker, who is a former Commissioner of Customs and Director of Elections, says he looks forward to assisting the regional energy company to expand and build on its track record. He says the company has established strong and credible footprints across the region in bunkering and fuel distribution. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart.
And when we come back, we talk Sygnus Real Estate Finance's IPO. Hey moneymakers, you're not an official part of the family until you have your merch. Visit KalilaReynolds.com/store to order your t-shirt and your mask today. Let's get this money.
This segment of Taking Stock is brought to you by Bulwark Insurance Agency. Insurance made easy.
Welcome back to Taking Stock. Sygnus Real Estate Finance is looking to raise 3.9 billion Jamaican dollars, or nearly 26 million US, and list on the main market of the Jamaica Stock Exchange. The subscription price for the general public is $19.30 Jamaican per share, or 12.7 cents US. The minimum investment is 1,000 shares, so about 20,000 Jamaican dollars after you add in fees, or 127 US dollars. The offer opened on Friday, July 23, and is scheduled to close on August 20. Well, joining us now to discuss, we have co-founder of Sygnus Group and Chief Investment Officer at Sygnus Capital, Jason Morris, and Vice President and Head of Real Estate and Project Finance at Sygnus Capital, David Cummings. Hello, Jason and David. Thanks for joining me.
Thank you for having us.
Hi, thank you for having us.
Of course, you're here to talk about the Sygnus Real Estate Fund IPO. I've been looking through the prospectus, and the first thing I want to know is, tell me, why branch out into a different company? So you have Sygnus Credit Investments as the main, the parent company listed on the stock exchange, and now you have this new company that's focused specifically on real estate. So why did it need its own separate entity?
Excellent question. So when Sygnus started, what we really created was a platform for alternative investments. And that platform currently has a private credit company, Sygnus Credit Investments. It has Sygnus Real Estate Finance, which we are doing the IPO for, and it has Sygnus Deneb Investment, which is a private equity company. That's not, we just did a private placement for that some time ago, and in the future that may or may not be listed. So we actually had all of these companies already, and I think because most persons are just familiar with Sygnus Credit Investments, they assume that Sygnus was just about Sygnus Credit Investments, but it's much, much wider than that. We have an entire platform that focuses on alternative investments.
Is it the same management team for all of these companies?
That is correct. So the investment manager for all of these companies is Sygnus Capital Limited, which of course is regulated by the FSC, and Sygnus Capital Limited is a wholly owned subsidiary of Sygnus Capital Group, which is the parent company of Sygnus Capital.
Mm-hmm. So David, tell us a little bit about the history of SRF, as you guys have been calling it. I know it was formed in 2019, and Jason mentioned a private placement.
Certainly, yes. And thank
or
you
2018.
Absolutely. So we started with a private placement in 2019, where we raised just over $16 million US dollars, mainly from institutional investors. And we pretty much have as our mandate to unlock value in real estate using flexible capital. And what do I mean by flexible capital? It means that we will look at every transaction and invest either debt or equity in order to unlock the value of that. And we'll do so across all segments of the market. So that could be residential, commercial, hospitality, industrial, or infrastructure. So in the continuing with the history, in the almost 2 years that we've been in operation, you will see from the prospectus, we have been able to enter transactions in pretty much all of the categories I just described. And we have debt transactions, equity transactions. We have them in Discovery Bay, we have them in Montego Bay, we have them in Kingston, and they cover quite a good selection of properties and investments to include Miami Bay, which is a hospitality investment, to include Belmont in Kingston, the former French Embassy on Hillcrest Road. We have quite a good pipeline of investment properties and, of course, real estate investment notes as well.
You mentioned that the objective is to unlock value in real estate. And I saw that phrase quite a bit in the prospectus. What does that mean when you say you want to unlock value, and how do you achieve it?
Well, good observation, right? So unlocking value, how do we achieve it? So I'm gonna give you two explanations. So the first part of the value creation process is the way that SRF executes its mandate, as David would have mentioned about the flexible capital, is we do what you call strategic property acquisitions, and this may be classified as an investment property or land held for sale, or buying shares in a company that actually has investment property or land. The second way is we deploy capital through what we call real estate investment notes, and this is a brand new term that we are bringing to the market. And a real estate investment note simply means a debt instrument that is customized to finance real estate transactions. So let's say somebody has a project, and when we look at it, it's a very good project, then we could invest in that using debt, and we customize the debt using a preference share, or it might be a profit sharing note. So have for example, a 5% coupon, and we get, let's say, 30, 40, or 50% or 60% share of profit of that development. So that's the second way. The third way is we deploy capital via joint ventures, and this now is where partnership comes in, because in some instances there may be persons who have very strategic parcels of land, and they don't want to sell the land, but there's value to be unlocked, and so we enter into a joint venture partnership with them, where we bring our financing expertise and our general real estate expertise, and combined we unlock value in that asset, which redounds to the benefit of shareholders and the joint venture partner. And the fourth thing is that we do our own developments. So if you think about what I just said, we are doing equity investments and we are doing debt investments. So when we exit our equity investments, we get capital appreciation, and of course our debt investment provide current income. So that strategy of being a specialty real estate investment company, that's how we are different from everybody else. Now, the second part of the explanation in terms of how we actually unlock that value. So the first part I just explained is how we deploy and execute our mandate. The second part of the explanation now is how do we actually go about unlocking value? What is so different about SRF and this unlocking value phrase?
Right.
Well, we unlock value through two channels. The first channel is what's called proprietary investment opportunities, and the second channel is called, basically strategic partnerships. So in the first channel, which is dealing with our proprietary investments, that is where we would scour the Caribbean, and in particular Jamaica, because that's where we are focused on at the moment, and look for strategic property acquisitions. And in the prospectus, you would note that we had Miami Bay as a strategic property acquisition, because it's a large acres of land, and it costs a whole heap of money. It's 24 million US we acquired it for, right?
I could imagine, because I looked at the map, the photograph of the location in the prospectus, and it's just like development here, development there, and this big empty space with beachfront. I'm sure that cost you a pretty penny indeed.
Yes, so that's very strategic. Then you have Lake Spen, it's 55 acres. And as David will explain to you, it's in the middle of the logistics and industrial belt in Jamaica. So that's a strategic acquisition for a lot of money. And of course, in Kingston 6,
that's where Wisinko is, in that area, right?
Just opposite Wisinko.
And of course, you'll see in the prospectus, we also acquired former French embassy. So you notice that these are marquee property investments that have substantial value creation that can be unlocked. So that's what we mean by strategic property investments. So the second, under proprietary investments, we have that. We also have under that bucket, the conceptualization and the ideation of what we're gonna do with strategic property assets when we acquire them. So that the whole value creation chain in terms of conceptualize what you're gonna do with it, put together the best project team to actually execute it so that we don't lose money on the project execution. Getting the pre-approvals and the type of approvals that we want in advance. All of that process, David and his team and Ike and so forth execute on that. So that's the second pillar. The third pillar underneath proprietary investment opportunities is the innovation and customization that we bring to structuring the financing. So let me walk you through what that means. So think about Mammy Bay, right? Mammy Bay cost us 24 million US to acquire. But as David mentioned, we started out with what? The equivalent of 16 million US. So that one asset alone substantially bigger than SRF. So how could SRF actually go and acquire it? Well, you will note in the prospectus where we spoke about, we negotiated and got a vendor mortgage from the vendor. That's one piece of the puzzle. Second part is that we use certain debt instruments such as a promissory note. And the third part, perhaps most important, we convinced the vendor to take shares in SRF in exchange for part of the payment for the property. So think about how difficult it is for the vendor to lend you partially money to acquire the asset, then turn around and take shares of which he has no idea whether the value of the shares is going to be unlocked or not. Well, clearly he does, right? Otherwise he wouldn't have accepted it.
Right.
So that skill set to do all of those things under proprietary investment opportunities, that's how we unlock value under the proprietary investment. The second channel, through which we deploy capital, are through the partnerships. And of course, we have project finance expertise, mergers and acquisition expertise, private equity expertise, private credit, real estate consultancy expertise. So we take all of that expertise and go into partnerships with owners or persons in the real estate market who have assets that value can be unlocked. And we go into joint ventures with them or whatever other structure the partnership will take and deploy our expertise and our capital to unlock value. And the final part of that side of the transaction, which is a secondary partnership, is where we look at a transaction and we customize a financing solution, as I had explained earlier, to fit the need and generate returns from that. So that's what makes us unique. We have strategic property acquisition where we are designing and being very creative about how we structure the acquisition, and then apply the same creativity to how we structure the investment package to actually unlock the value. And then on the secondary partnership, putting all of those skills and expertise to actually unlock value in assets that we actually don't own. So we do this in partnership and shareholders get the benefit, but as well, the economic community around that asset gets an uptick in value, and we really are able to mobilize the capital and deploy it in a value creating way, which is different from buying an asset that somebody else would have constructed and we holding it for lease income. We're not doing that. Or we are just only focused on developments. We're not doing that. We are doing, a wide cross section of combination, and we are looking at asset in hospitality, in industrial, commercial, etc. So that's the differentiating factor, and that's how we unlock value in real estate assets.
Based on how you just explained it, you do have a very unique mix of skills that come together to form the investment strategy for SRF. And I think, David, a good example of the unlocking of value is what you guys did with the Miami Bay property. So describe what you did there.
Certainly, thanks. So having purchased the Miami Bay property, we took a long, hard look at what was on the ground, and it essentially was almost 30 acres of land that was open. It was unsecured. There was all sorts of activity going on site. The beach clearly needs some significant work to bring it to where we want it to be. And so we took a long, hard look at it, and we started to do a number of steps to help us to unlock the value. And of course, first of all, being to secure the property. So anybody who drives down just past Old Fort Bay at the end of the North South Highway, you'll see a big wall in place. That was part of what we did to secure the property. We've also did a subdivision where we sold half the property to Sandals. And we have a joint project where we're doing the works to enhance the drainage and the beach nourishment and beach enhancement as well, to make it a very suitable beach. We have also looked at a number of other things. Essentially, we're doing a tree survey. We just don't want to come along and to be doing it's just scrape off the land and plant palms afterwards. We're actually doing a tree survey with one of the environmental firms here in Jamaica. So lots of things that we're doing are really meant to enhance the value of the property or unlock the value, so that we're transforming what essentially was an open land that was overgrown into something that, on one hand, beside us is Old Fort Bay with some very high-end villas, and on the other side of the property is going to be a Sandals Royal development, which as you know, the Sandals Royal sits at the top of the Sandals chain. So those are some of the things that we've done: securing the property, doing master planning, doing a subdivision, doing the beach enhancement. Those are some of the things that we're doing really to allow us to optimize and extract and unlock all the value possible from the Miami Bay land.
So you ended up gaining $400 million in unlocked value. That's the value you were able to unlock from doing the things that you just outlined in Miami Bay.
Absolutely. And as Jason will explain, that is precisely one of the mandates of us here at Sygnus Real Estate Finance. Jason?
Yeah, so I was saying that original 400 million is actually, that value came from the difference between the acquisition price and the valuation. The value that was unlocked is after that is about 700 million.
Wow. And you still own half of the property, right?
Yes, correct.
So even more gains left to be unlocked from that.
Yes, and in order to unlock those additional gains, we are currently undergoing a series of studies to see what's the best way for us to optimize the additional value that we can unlock. One of the other things that we need to unlock value is we went to NEPA and made an application to the NEPA DAC, that's Development Assistance Center. And we have, of course, now pre-approval for a wide range of options to include, we can do a hotel, we can do villas, condos, apartment, houses, residential, hospitality, spa, a restaurant, a beach club, So we have pretty much opened the door to allow us to spend the time to examine what will give us, the best return, how much we can unlock further. Because of all of those steps, to include approaching the regulatory authorities early, instead of coming up with an idea and saying, please approve this. We've asked them, okay, what will you likely approve? So we've been very proactive in how we can further unlock the value.
Is SRF looking to hold that property and do construction there, or do you want to sell that as well?
We haven't made a decision as yet. It's because, as I said, it's an investment property for us. But what we have the good thing is that we have a lot of options in front of us, and one of those options include looking at quite a few options to develop it. And whilst we are doing those studies and running the financial models, to see what will give us the best return and so on, pretty much we continue to hold the property and continue to ensure we can continue to unlock the value until the stage where we are ready to make a decision.
One of the other big properties that we need to talk about that you're invested in right now is the One Belmont Road project, a 9-story commercial building. Tell me all about what's going to happen there. When is it expected to be finished?
Certainly. So it should be finished early in 2023 because we are actually breaking ground within another few weeks. I'm sure certainly you'll be seeing more about the groundbreaking for that particular project. It's going to be about 19 months of construction. And what we're bringing to the Kingston skyline is a very attractive, striking design. It's actually 5 stories of commercial and 4 levels of parking. One of the things that we did in the design brief, we wanted to ensure that I think too many people go to buildings in Kingston or business places in Kingston and are frustrated because they can't find parking. So we were determined to ensure that anybody who goes to One Belmont, whether it's staff, clients, customers, whoever it is, and so on, you will be able to find somewhere to park your car. And so we have 4 levels of parking designed into this building here, including a basement and 3 levels of so a basement and 3, so 4 levels of parking total, over 300 cars, and 5 levels of commercial. We've also designed this for the post-pandemic world. What I mean by that? A lot of time and energy we'll be spending trying to sanitize things and so on during the pandemic, and we don't know when this one will be finished. We don't know when the next one will be coming. So we've designed in certain features that make it touchless. So when you park your car in the covered parking to go to your office, you won't have to touch the building. That means the doors will be touchless. The elevators will be touchless. The elevator controls, the latest elevator controls are now touchless. All the bathroom fixtures will be Kohler touchless technology.
How is it touchless? Do you talk to the elevator? The elevator open?
No, I believe they use infrared and other things which pretty much.
Motion detection.
Correct. Yes, depending on the floor you want to go to. So, but the idea is that you're not going to have to run around trying to sanitize the controls or the door handles every 45 minutes or every hour. As we're trying to do now, and you're afraid to touch the surface. The other thing we're also doing is, I think all of us go into buildings, and as they walk into the building, there's a dreaded security guard with a handheld thermometer trying to hold it cold up to your forehead. We have designed in infrared system where, as you walk in seamlessly, it will take your temperature, and only if it is elevated will an alarm go off, and you can be pulled aside to have somebody do a secondary check. So in the morning, when you have 8, 10, 12 people walking in through the door together, nobody has to stop or break their stride in order to have their temperature. The building will actually automatically scan and do so, as you walk into the building. So what we're creating here is a safe and secure environment where, certainly going forward, those corporations, which I'm sure most do, who have an eye or to protect their most valuable asset, as in their people, can be in a building that has been designed from the ground up with those safety measures in place. The other things that we're having in the building here, of course, is 4 elevators. We've ensured that we have 4 elevators, including one that can take a stretcher gurney. So, if in the unlikely event that somebody needs to be brought from a floor or, on a stretcher, one of the elevators will fit a stretcher. So, and we have 4 elevators. So we want to ensure redundancy. We want to ensure that this building here is designed for the corporate client who has the interest or who wants to provide a certain environment for their clients and for their staff as well.
It's a big investment, obviously. Does this still fit within your timeline for exiting within 3 to 5 years, which I know is the strategy of SRF to get your gains within 3 to 5 years?
Yes, it does. So the construction time for this particular project is 19 months. The construction time for the Inca headquarters you would have seen in the news, that is also 12 months. And when you add to that the time it takes to have done the designs, gain the regulatory approvals, the building approvals, net approval, the negotiation for any leases and so on, it pretty much will take you to about 3-year mark for most of these projects, which is well within the mandate for us to exit within a 3 to 5 year time horizon. All of the projects that we have outlined in the prospectus will fall within our 3 to 5 year time horizon for Sygnus Real Estate Finance.
So you guys have a pretty good mix of types of real estate that you're invested in, between commercial, residential, even tourism space as well. But why only Jamaica in this, at least in this initial stage, Jason?
Good question, right? So, when SRF started in 2019, and as it so happened, when we were conceptualizing what to do, the government changed some of the some of the rules in terms of transfer tax, etc. And when we looked at those changes and looked across the Caribbean and look at kind of a regulatory environment and the cost environment, we realized that the Jamaican landscape had so much land that was ripe for value creation. Only thing that was missing was a specialized financing vehicle like SRF, which we were designing at the time, and the skill set to actually conceptualize and unlock that value. So because of that, and when David and his team and us scanned, we decided that there was so much value here. Let's spend the first 2 years looking at Jamaica. So apart from the transfer tax and the other changes that resulted in lower cost to transfer land or acquire land, you also look at the residential space. And I think real estate in Jamaica is misunderstood. When people say real estate, everybody think about high-rise developments of apartments and maybe 1 or 2 commercial. They don't think about anything else. So on the residential space, the demand for residential for homes is about 20,000 per annum, right? How much are we supplying per year? Less than 5,000. That gap is 15,000. How long would it take to close that gap? 2 decades or more at the rate that we are supplying. So there are going to be pockets within residential, like, if you're doing a 1-bedroom for 36 million, yeah, you're going to have oversupply in some areas because that's where everybody gravitating towards. But there's ample space within residential, as we have outlined in our prospectus, where once you put it up, it goes, because it's not very large and it's very unique and strategic and it's solving a particular need. On the industrial side, Jamaica doesn't have a lot of industrial assets, and the location of the lands that are required for doing industrial, we felt that we absolutely had to acquire a substantial acreage in this space, because this is where we noted during the pandemic, all countries all over the world, this part of real estate really flourished, and it's the future. And in the commercial space, if we look in Kingston, there hasn't been any premium development in the commercial office space in the last 20 years, right? So it is underdeveloped. And certainly in infrastructure space, you haven't had any car parks built and so forth and so on. So when we look at Jamaica, we felt that from a risk-adjusted point of view, and from the opportunities that exist, we absolutely had to plant the seed and nourish it and grow it. And then we will look towards the rest of the Caribbean, because Jamaica flat out was just the best opportunity, hands down, across the region. That's the reason why.
I feel like I could talk to you guys about SRF all day, because it's just such a different type of company that there's so many questions that naturally arise. But we will be giving our viewers an opportunity to ask you questions as well during our live Q&A immediately after the show. So make sure you all tune in. But there's one more I need to get in. So one of the risks to this investment is that change to the IBC laws in St. Lucia. SRF, just like SCI, they both are registered in St. Lucia, but they are changing their international business corporation law, or they have changed it. So how does this affect you and the tax structure that you have now?
Well, the key thing is to prove your economic substance, right? And we have already set up shop in St. Lucia in terms of having a subsidiary of the investment manager. Setting up shop there, we have already, employed persons there. So the way that they, and of course, we continue to get advice from our tax consultants in St. Lucia. But the way how this will work is that 1 year from now, they will do the first assessment. And when they do that assessment, what they'll do is determine if they feel that you need to do additional things to prove substance, then they will put that in their review and you make those adjustments. So it's been talked about a lot, and we have been very proactive by heading there, setting up shop so that we can prove economic substance and not be impacted by that 30% on the investment assets.
All right. This discussion is to be continued, but before that, so tell us how we can subscribe to this offer.
Very simple. We have two joint lead brokers, Surgical Investments and Scotia Investments. You can speak to any one of their representatives. We have 5 selling agents on the transaction, and pretty much, the subscription is going to be run through Surgical's e-invest platform. Of course, if you are, JMB who's a selling agent, or you're Proven, or you're Barita, all of the selling agents, then, they have their ways of getting their clients through to either go through the e-invest platform or whatever other mechanism that they have to get their clients through. So it's just like any other, IPO or APO. Speak with your broker, contact your broker, and they walk you through what that process is. You can do it all from the comfort of your home, online, on the Surgical e-invest platform.
Thank you, Jason. Thank you, David. All the best with the offer.
Sure. Thanks much.
Thank you.
So, will you be rushing to buy shares in Sygnus Real Estate Finance? Comment below and also take our poll. The link is in the description below. Also, stay tuned for a live Q&A right after the premiere of this episode. You can ask the Sygnus team anything you want to know about this IPO. Up next, we've got your market recap, and the analysts are standing by.
This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy.
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange declined, with the combined index losing less than 1%. 108 stocks traded across both the main and junior markets of the JSE for the week ending Friday, July 23, 2021. 37 advanced, 60 declined, and 11 stayed the same. 115 million shares changed hands on the Jamaican dollar market, totaling nearly $636 million. Stanley Motor ordinary shares traded the most, taking up 30% of market volume. The stock lost 5 cents to open the week at $5.85. Radio Jamaica traded the second highest, with people buying and selling nearly 15 million shares in the company. The stock was also second for this week's biggest gains, where it gained 45 cents to open at $2.12. And Select F rounded out the most traded, taking up nearly 10% of market volume. The stock lost 1 cent to open the week at 57 cents. Now let's see who had the biggest gains. Epley 7.5% preference shares due 2024 stock price rose nearly 35% to close last week at $14.82. Rounding out our biggest gains, JMB Group 7.15% cumulative redeemable preference shares, which gained 58 cents to open this week at $3.35. On the losing side now, Elite Diagnostic was the biggest loser for the week, down nearly 12%. The stock closed last week at $3.18. Epley was second on the list, its stock price down nearly 12% this week. The stock opens this new week at $38.59. Rounding off the biggest losers, Medical Disposables and Supplies, which lost 10% to close last week at $4.75. Market recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers.
Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by investment, research, and sovereign risk analyst at JMMB Group, Leovani Dillon, business writer at the Observer newspaper, David Rose, and financial coach, founder and CEO of Profit Jumpstarter, Keisha Bailey. Hi, everybody. How's everybody doing? You guys look great.
We're doing good.
Glad to be here.
Yeah.
So it looks like the summer season for share offerings is hot because we already have Epley preference shares and then Sygnus IPO. We know NCB is coming with their trip funds pretty soon. We also know Barita may be coming with something else. Who knows? After August 3, we'll know what the shareholders decide. And other things we're hearing about in the pipeline as well. But Sygnus Real Estate Funds, that IPO is now open. I know, Leo, you're not going to be commenting on that because JMB, you guys are still doing your analysis and coming up with a final position on it. So I won't put you on the spot about Sygnus. But I can ask our two independent panelists today, David and Keisha, what are your thoughts on Sygnus? Let's start with you, David.
Well, this is the second Sygnus vehicle to come to market. So for those who don't know, Sygnus Credit Investments Limited was the first company of the Sygnus founders to come to market. And now Sygnus Real Estate is joining their affiliate to become the second company and is aiming to raise between $3.9 billion with a potential upsize amount of 4.59 billion JMD. And this is just, to fund their pipeline opportunities that they see in the market. So Sygnus Real Estate Fund is in what we call a finance company with a specialty focus on real estate. So SCI is private credit where, they lend to companies specifically as a going concern. Whereas with Sygnus Real Estate Finance Limited, their focus is to, unlock value in real estate that is somewhat trapped. So, their focus is buying a property, or I should say a project. They provide the financing and, potentially security in the form of construction-related notes or real estate-linked notes, or they probably the one to actually develop the project and then dispose of it and collect on it as the equity owners. And it's just multiple ways for them to build value. So as we've seen, Ocean's Edge in St. Anne is fully sold off. It should be finished by November. And that's just the main loan project. They recently broke ground on the Spanish Henwood project for IMC Caterpillar, the Dominican Republic business that sells out here the IMC products. And then, they're also looking to start their One Belmont project very shortly. So, as they pointed out in their launch recently, it's at a relative discount when you're talking about, book value relative to what's being offered at the market. And when you look at even the company's post February 28th subsequent transactions, you've seen significant uptick. So they recently just purchased the former French embassy on Hillcrest Avenue. They bought 6 Lady Musgrave Road, and they're still, aggressively pursuing the opportunities. So for investors looking at practical long-term focus and looking for, a company with this kind of exposure to the equity side or this kind of growth perspective of real estate companies, great opportunity because the ROE up to February 28 was 32%, which is very high. But the thing is, one caveat is that they only pay dividends for the first year. So that's one thing that should be noted for persons who are looking to get into this offer.
So Keisha, what do you think about the Sygnus branching out and creating a separate company just to focus exclusively on real estate?
I think it's a good strategy because it creates the focus that is needed for their operations. Lending and real estate transactions are separate from SCI, and so it's a good move to have a separate entity responsible for that. It gives the team greater focus in their operations, and the fact that they're going to be focusing more on the value stage of real estate financing is extremely lucrative because that's when you're able to extract high returns for your shareholders. So it's a very good strategy. The fact that they're also financing from acquisition and being involved, holding hands right through to the structuring and the implementation of the deals really ensures that the company can unlock the value from the transactions they're a part of. So I commend them on their strategy to have a fully focused area of the business on real estate.
You know, and looking at some of the projects that they're involved with, David mentioned the one Belmont Road. There's a fancy photo there in the prospectus of what that will look like. I think this is a 9-story commercial building, and it looks really, really nice. And there are other things that they're involved at the construction stage as well. Construction is still booming, isn't it, Keisha? What's up with that?
So great things happening in the construction industry. So far, there have been a bunch of new developments, just grabbing my numbers. So we've had 64 new developments issued in St. Andrew since the start of 2021. And then when we look at
64?
That's a lot. 64. And when we combine
different
that with
types of developments?
Yes, new ones, just in St. Andrew, so one parish. When we look across all the other parishes, we have 27 new developments coming, totaling then from more than 90 new developments so far in 2021. So booming construction industry for sure. Financing as well has not been impaired because of this. So you may be thinking, well, there are a lot of new developments. Can these developers really get the funding, and can they meet the funding requirements? So far they have been. There have been no delinquencies because of any delays in sales or anything like that. And then what's interesting also is that the requirements for pre-sales were doubled last year to kind of mitigate the risk within the sector, because a lot of persons were worried that, you know, are we in a bubble? Are we potentially having credit issues? But so far, nothing of that sort has been happening, and the industry continues to look extremely vibrant. And so companies like Sygnus coming in, great step in the right direction for an industry that's already doing very well.
Those pre-sales requirements were doubled and the construction is still going ahead, then that means the units are flying off the shelves.
Yes, and these are high-priced units. They're flying off. So there's demand locally and internationally for these developments. So that augurs well for the industry as a whole. And then when we lay that onto Jamaica's economic growth, that looks extremely favorable as well.
And what types of developments are these? Residential, commercial? What are we looking at?
So it's a broad mix, mostly residential, but there are also within that a lot of new commercial developments as well, but it's predominantly residential developments.
All right, well, let's look at some results. Supreme Ventures Limited results are out. So this would be, Leo, is this the first set of results for them since Izizzi started giving them competition?
Not really, but it's the first one for the full, I think for the full quarter now that you're seeing it. So all right, so on the top of it, it is a good number. So you look on the all right, so let's give you a context here. So the overall market is up about 6% year to date. It's up about 9% SVL, right? Those numbers that they reported were fairly good. Revenue was up 46% versus, so that's revenue Q2 June 2021 versus Q2 June 2020, right? So that's up about 46% and profits up about 200. So on that surface, it's great. However, you need to, look a little bit below the surface and figure out why that, that big jump. So of course, in 2020, they would have been impacted severely by COVID. The whole lockdown was kind of extreme around that period of time, right? So it's a low base. So if you look back a little bit now, so if you go back now to Q2 June 2019 to get a kind of pre-COVID look at what SVL does in a Q2, what you'd see is that revenue is still up. So I think revenue is up about 16%, and profit is about flat. I think down 1%. But where why I said the results are a bit mixed is if you look on the operating profit, that's actually down about 9%. Because what happened is that the revenue is up, but then their expenses is up about 46%. So this is expenses now when you're looking at it Q2 June 2019 to Q2 June 2021, right? So because of that increase, you're actually seeing an operating profit fall off a bit. But however, they were able to kind of flatten it out at the bottom line because they had some gains on securities, and so that kind of boosted the overall profitability. So it was all flat. right? So it wasn't that detrimental. Again, another thing that you have to watch is that the operating margins actually fell. So if you look at the operating margins in June 2019, Q2, that was about 9.8%, basically 10%. Now it's about 7.6%. So they could be seeing some pressures coming in from the additional competition from that number. If you're looking at that number, the true test for me is what you see going forward. So 2020 was the bad year for them on a whole. That's because despite the weakness that they had in Q2 2020, they were able to recover in the second half a lot of that and then basically end with a decent 2020 full year. So now we're going into September, December. That's going to be the real test. And of course, with any new product coming into the market, they're going to take a little while to get up to scale, to ramp. So you're not seeing the full competition. Now, SVL is not just sitting back. So you see SVL doing acquisitions. They're going into microfinance with the acquisition of Michaela Financials. 51% stake there is a microfinance firm, so they're doing that. They also, of course, recently acquired more of post-to-post betting, so that
Right.
Right. So they're doing things.
So let me ask you this then, Leo. So this uptick in revenue that we're seeing from SVL, is it from their core business of gaming, or is it from these other areas that they've gone into?
It's more from the core. So the core revenue is up. The only thing, again, that kind of constrains them is that expenses kind of growing a little bit faster. So that's why I said the operating profit fall. But yeah, revenues, as I said, even if you look on it post-COVID, so that's, no, sorry, pre-COVID, so that's June 2019, compared to now, you're seeing that move, right? You're seeing it actually, higher, 60% higher. So of course, if you look at it now compared to COVID, it's big, it's 46%. But, that's a low number that you're coming up. So if you go back a little bit, look on pre-COVID, that's when you see a more normal state of growth. And then from that perspective, they are doing well on the revenue, expenses up a bit. So it's not completely what I call it. So it's kind of mixed in the sense that you've seen stronger revenue, but the operating profit kind of coming in a bit, and that could be due to competitive pressures. So basically, you'd have to monitor it going forward. If you look on the PE now, it's about 19 times. You look on the PE over the last year, it's about 19 times earnings too, running up as high as like 25 times earnings, and some, of course, sometimes a bit below 19. So I mean, the valuation from that perspective isn't crazy at 19 times. But again, the future for them is still a bit uncertain in terms of the competitive pressures that they're going to be facing. Because again, they're doing things on the plus side to mitigate it, but at the same time, though, their core business is under pressure, and that could be a big problem for them. So you have to kind of, watch this one. I think, it's decent number again, a bit mixed though. So I'd like to see more for the rest of the year in order to see how they stave off that competition.
So Keisha and David, it looks like they don't really have much to worry about, at least based on these early results, because like Leo said, we have to see what it looks like going forward. But what do you make of these results? David, you first, then Keisha.
All right, quickly. So one thing when Leo mentioned the increase in expenses, what you have to remember that SVL increased their payout amount to their customers, or in this case, their players in their games. So Cashback was
so the competition would have had that impact, because the competition promised a higher payout, forcing SVL to increase their payout. So it has had that impact.
Yes. So it was $10. So you get $10 in Cashback, and you won, you get $270. No, I think it's at $305, and that's just for that one game. And then SVL has been expanding their other line of game businesses, and even recently the betting game and lotteries commission, made mention that their competitors should be Izizzi and Boom and Maho Gaming would have done $300 million in revenue in the party in lottery segment, which is what we know based on disclosures. But at the same time, SPL is going to have a very fun fight going forward. But as Leo mentioned, they're diversifying. So, this 10% stake that they acquired in main event is going to serve as this starting point for them to push on for this joint venture that they're planning to do in terms of entertainment company. And the specific details, I can't remember them right now, but it's going to be just a good step. And they're also looking to the fintech and other diversified services. And as you look at it, really and truly, SPL is a beast in its own right. they have the market space, they're cash beast, and they have so much more spaces to capitalize on just because of their network. And they've actually been adding more retailers in recent times. In half a tree at the total gas station, they are now an SBL retailer. So that kind of gives you an idea as to what's going on.
Yeah, big company there. Keisha?
So as we think about companies under pressure, one of the main things for SBL that I commend them on is the move also geographically. So they're experiencing pressures locally, and they've moved into other areas such as Guyana. I think that's a promising area for them as they look to expand their gaming business there. Guyana, that region has done well for them so far. It's a small amount of the overall big financial picture, but I still believe there's a lot of room for upside there. And they've been pushing increasing product awareness in that market. So I expect that they'll be able to benefit from that in probably the next year or so.
All right, so finally, let's look at this Delta variant of COVID-19.
Yep.
Spooky. Oh my goodness. And so we haven't identified it here in Jamaica yet, but I am not optimistic that it actually isn't here. Like I think it's already here, because if they have it in Miami, it's basically here based on the linkages between especially Florida and Jamaica. If they have it there, it's pretty much here already. But it's also wreaking havoc on the financial space. So David, what are we seeing with Delta variant and the stock market?
Well, as you could see recently, earlier this week, on Monday, the Nasdaq had its worst day for 2021. And I think it was on like 1 or 2%. And that was just, based on the increased fears of Delta pushing us back into further lockdowns, which has already had to occur in different parts of the world. So Australia, the UK, some US states have, started to push back or change their measures to say, mask up again, we're going to have some lockdowns again at the same time, cut back on certain outdoor activities. And not just because the reality is these variants, alpha, beta, gamma, delta, lambda, all the way down to omega, they're just coming differently each time. And the thing is, Delta actually has its own Delta Plus variant now. It's a little iPhone. It's only Delta Plus XL. And the reality is, as long as COVID is, even though we have these vaccines at the moment, the problem that we're facing is, what we're seeing based on the current studies is that you might need to take extra shots of the vaccine. So third world countries like us are going to be held back even further if Delta and new variants continue to wreak havoc on our reopening of our economies. Because the US and other places have to reopen fully. Disneyland is basically back to full operations, but Jamaica entertainment sector is kind of still in a very delicate space, and the Prime Minister recently said that they're going to consider to re-implement some measures. So Delta is a very serious concern because businesses were ravaged last year, and it's very hard for prices to come back down after they've gone back up, especially with the risk of potential remedial measures, which should force companies to maintain those high prices or increase them again, which puts into the question again that Delta might even cause inflation just because of the risk of businesses locking back down. So that's just my take.
Boy, it's like you can't win. One step forward, we have the vaccine. Another step back, here comes Delta. Jeez, man. I don't know how PM is gonna work this thing with new restrictions, though, because if we have companies like Dream Entertainment already put in big investment to put on Dream Weekend because they got the go ahead, you can't just walk it back so easily. Independence Weekend coming up, and that's gonna be a big one for the entertainment scene. Leo, your thoughts on Delta variant before we go?
Yeah, man. All right. So Delta variant is one of the major, risk factors out there right now for the market on a whole. So, for example, we saw some data coming out of Israel today that was saying that 39% that take the Pfizer vaccine, the efficacy now is down to 39% when it comes to the Delta variant. So remember, Pfizer was one of those that was up there in the 90% when it was the earlier iteration of whole COVID virus. So now you see the efficacy coming down to 39. However, it still significantly protects against severe illness, right, from the disease. So that's still good, but you can see that the strength of it going down. And as David had mentioned earlier, so now there's talk about maybe you need a third shot, right? That being said, Jamaica as it is right now doesn't have a high penetration of the vaccines, in the population. So that can be a bigger problem for us versus more developed markets that you have, granted, not at the levels that we need, but it's at least up there in terms of, like, for example, in more developed markets like the US, basically, if you want it, you can get it. But then, of course, there you have another problem in terms of a lot of persons have access to it, but don't want it. So because of that now, it's creating this thing where the virus now, the real risk to me now is not even so much the Delta variant, but the fact that it will keep evolving as long as it's out there. So it becomes more and more deadly and then more and more unknown as it keeps, mutating, right? So that to me is one of the bigger risks out there than the current variants that here is what's gonna happen in the future if we don't achieve some level of herd immunity in the general population. And I've been on a global scale, not just in developed markets. So
That's a good point.
yeah.
Anyway, I hate to leave it on a morbid note like that, but that's a really great point. Thanks for joining me, everybody. Appreciate it.
Glad to hear it.
Thanks.
See you next time.
All right. Don't go anywhere. I've got a preview of what's coming up from KRM this week.
This segment of Taking Stock, The Analysts, was brought to you by Jamaica Money Market Brokers.
That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at KalilaReynolds.com/newsletter and turn on those post notifications so that you can be the first to see all of my other videos. We want to help people learn more about money so we can all get this money together. Now this week on Money Mondays JA, we'll continue our look at balance sheets. I'm teaching you how to understand financial statements. On Money Moves JA, if you have a creative business, you need to get it registered now. You could be missing out on funding and other perks. Follow me on Instagram and Twitter at Kalila Ray and follow at Taking Stock JA on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information. Also visit our website, KalilaReynolds.com, for financial information you can use however you like it. Watch, listen, or read. Now tell a friend about Taking Stock. Investing is the new sexy, so let's make it cool to talk about money. I'm Kalila Reynolds. Let's get this money.
Let's get this money.